South Africa's consumer price inflation numbers have come in this afternoon, and it's come in flat at 5.6% year-on-year in November, in line with market expectations. Analysts don't expect any huge upward pressure on inflation in December, but 2013 sees a new CPI weighting, and analysts expect this to impact inflation to the upside. Monique Senekal reports.
Buying groceries and filling up at the pump are regular occurrences for consumers. And next year, these items will have a greater impact on inflation. But how will this impact the Reserve Bank's monetary policy going forward? South Africa adopted inflation targeting as a formal framework for monetary policy in February 2000. But question marks were raised in 2003 after SATS SA was accused of overstating the consumer price index for mortgages.
All statistics offices are governed by what is called the United Nations Statistics Commission. And in the commission, methods are determined on collection of information. Prices is one such method. Of course, compliance is a different matter. In as far as SATS SA is concerned and South Africa is concerned, our compliance is absolutely tops. Of course, we messed up CPI in 2003. We know the consequences of bad practice. In 2003, we had these consequences facing us, and we then revamped the entire way of collecting CPI by direct price collections from shops.
The inflation target is a range of 3 to 6% for the year-on-year increase and may come under pressure with the new weightings. Some of the main drivers of consumer price inflation will see their weightings rise significantly, in particular electricity, insurance, petrol and rentals. Trade Union Solidarity, which represents the mining, agriculture and manufacturing sectors, welcomes the new weightings.
CPIs over the whole world and in South Africa are never really reflective of any specific individual or small group of individuals' living costs. It's not intended to be that. It is an average. So what we do is we look at specific things in the basket that are of importance to our members, depending on where the negotiation is taking place, on what income level they are, and specific things like that. And then we highlight those. And then the company and the members and us in the negotiations can decide how much importance needs to be given to each specific factor.
The new CPI weights are based on the 2010-2011 Income and Expenditure Survey, which is supplemented with retail data. The survey showed a shift in spending away from goods to services. Goods will now account for 49% of the overall CPI weights compared with the current 54%, while services will make up the rest.
Inflation targeting is one of the anchors these days of central banking around the world. But it's an anchor that's disappearing because all of a sudden around the world, central banks are having to fight a big recession and huge debt globally. And they're having to do that with much lower interest rates than is warranted under inflation targeting. Now, we don't think inflation is going to run away, but in South Africa's case, we're very likely to go outside of our targets right now. But we're unlikely to see an increase in the interest rate, at least in the short run.
The new CPI weights will be applied from January, which means the Central Bank's Monetary Policy Committee won't have any information on the new CPI rebasing exercise at its first meeting. The re-weighted CPI numbers will only be available in February.
Even at the March MPC meeting, they will only have 1 month's reading, and that will be the January reading, which likely will be contaminated by the fact that a linking process has taken place in that month to link the old CPI inflation rate with the new one. So the concern clearly is that it may only be by May that the Reserve Bank has sufficient data on the new CPI inflation series to actually make a monetary policy decision based on that data.
So while analysts debate the impact the new CPI weighting will have on inflation and monetary policy, it's consumers that will face the real impacts of inflationary measures when purchasing goods and services.